Good morning, traders. Manny Cabrera here, founder of MDC Trading Academy, with today's pre-market forecast for August the 18th, Wednesday, August the 18th. Let's quickly jump at look at our news items for this week. For this day. 10:30 crude inventories, and most importantly, 2 o'clock FOMC meetings. We're going to look at the last meeting notes of the last FOMC meeting. That's going to be very impactful. Remember, they've been talking about potentially reducing and or eliminating quantitative easing and what effect that's going to have on the economy. Remember, also probably some mention about the economy in reference to inflation, production, retails, and unemployment. So that's going to be a very key report. So careful. Market may just sit around and do nothing first half of the morning, just waiting for this to happen, or it may be a very active day. Let's look at the market right now to see what way the market seems to be going. Now, market all-time high day before yesterday. Remember, we had talked about the true support and the true resistance of these markets. The all-time highs will continue to be the true resistance of these markets, and of course the 20 SMA, which is exactly what happened yesterday. We went down all the way down to it. Market recovery, and of course market right now. And look at the volume, by the way. This is the interesting thing. After averaging such low volume in the last several weeks, yesterday we had over 1.7 million contracts traded to the downside. Good, healthy move to the downside. Great place for support for buyers. Right now we're undecided. Right now we're in a little bit of a compression in the market right now. This is where we are again. And remember the tests are, and by the way, it's interesting how this particular range of bars that we have here has a top, a resistance, and here's with the confluence of that resistance with the 20 SMA. You see, when you do a technical analysis for a long time, you start to see the seams in the fastball. You start to understand these things. You start to expect and anticipate things. So when these things happen, they don't surprise you. They just help you feel more confident on the things that you're thinking about in reference to the market, and of course the trades that you're taking. That's what's important. That's what we do here in MDC Trading Academy, is we teach you how to read the stock market like a newspaper, and then how to execute like a professional athlete consistently. That's the difference at MDC Trading Academy. It's a professional training that we offer. It's not just a course, it's a training, a full 6 months course training that takes you from A to Z. This is what we do at MDC Trading Academy. Let's look further into these behind these numbers, which was what we're doing is gleaning information from point to point. Now remember, this is where we were at the beginning of the week. We had talked about potentially oscillating between this particular range. Of course, any break below there, of course, we're anticipating a break. If this could have been a break to the downside or a break to the upside once it fell this range. Now, and here's what happened. Here's the test. There's the break. Look what this line, this trend line that used to be support now becomes resistance. Look how the market pivots off it. Look where it comes down to. It comes down to this previous range from before. Remember, it happens all the time. Break ranges, and then we use whatever, if it's to the upside, whatever used to be our resistance, now it's used to support, and vice versa. And here we go, bam. And that's where we are right now, right behind this range. This is the 20 SMA right here. This is the 20 SMA right here. So where are the two potential moves? Very easy. There's our all-time high. This is our all-time high up here, our new all-time high. And the current 20 SMA. Now there's a lot of movement between here. There's no doubt about it. That's why we have to look a little finer behind these numbers, but at least we understand the ranges. That's really important as a trader to have a mid to long-term range. Now remember, a lot of these mid to long-term ranges can become daily ranges. For example, what happened yesterday, it ran all the way down to 20 SMA. The likelihood of that happening one day is very low, but it can happen. But at least we have a map. We can see, we can start kind of figuring, hey, which way can this potentially be going next? Like, for example, here, see this trend line here, market clearly broke above it. Use it as support. Can it hold support? That's the question we're going to be settling in our next time frame here. Again, we're gleaning information, trying to develop our hypothesis. So here's the market from yesterday, a complete oscillation from this area here. We were kind of sideways there for a little bit. Market continues to drop straight down to the middle of the afternoon, bounces back after lunch, right back trying to retest the intraday high. Fell short, then it fell into this clear support and resistance area, and now a clear compression. And that's what we are. Support, short-term support and resistance of this market, right here and right here. But all of this is going to happen after either breaks here and holds, or breaks here and potentially holds. And then any break below this, it's going to be an acceleration of movement down. And of course, there we go. That's our next target, the intraday high, and potentially move higher. That's the moves. Wait for confirmation and let us know if you have any questions. Take care.